Hello and welcome to ETCFO Leadership Summit. And this panel discussion is specifically about restructuring in the harshest economic winter. And I have with me Upma Goyal, the CFO of Ujjivan Small Finance Bank. Ms. Goyal, welcome to the panel discussion.
Thank you, Amol.
My next panelist is Ramesh Subramaniam, CFO Tata Power. Mr. Subramaniam, welcome to the panel discussion.
Good morning. Thank you. Thank you, Amol.
And my another panelist is Sharik Karimboy, CMD Goldstein Roth and Company. Sharik, welcome to the discussion.
Thanks very much, Amol.
We're supposed to have Mr. Ashwin Parekh as well, but unfortunately he's stuck in the London because of the stringent lockdown and we could not have him right now. But nonetheless, we'll proceed with the restructuring in the harshest economic winter. To begin with, we have seen major changes from the regulator specifically in the last 6 months. It came with the one-time restructuring. Many borrowers initially thought that the bankers and NBFCs will help them, to go ahead with the one-time restructuring. But when I spoke with the bankers and the heads of the NBFCs, what I realized is they got a cold shoulders from the borrowers, and restructuring could not, reach to a level where it was expected. So we are actually trying to get a 360-degree perspective on how actually the corporates, the bankers are exactly looking at the restructuring. And let me tell you, dear participants, I have really a diverse panel. I have a banker, I have a corporate, and I also have a global investor. So three people, I'm sure, will give a different perspective here. So Ms. Goyal, I will begin with you. And if you could tell me, what are the major reasons for the low response from the borrowers, specifically for the restructuring scheme?
Amol, if I really talk about the restructuring and the difficulties what the borrowers are facing, so it's more specific corporate-wise, not in general that there has been a very, very low demand. One of the important thing is in the restructuring, when we talk about it, the borrowers are going through the difficult phase. And if the corporates are understanding their difficulties and also providing the solution, which will help them to go through this pandemic smoothly, I am not seeing that they will not go forward for this particular thing. We in Ujjivan, we have been very customer-centric organization, their pain points and able to provide them the solution which suits their cash flows, current as well as the future. So for us, is the response is not that muted as has been seen in the industry level.
And I will move forward to Mr. Subramaniam. Subramaniam, sir, if you could add more on why there is a low response, because initially the borrowers were really happy when the scheme was announced. But after that, even the bankers agreed that they received the cold shoulders. So what could be the reasons?
I think, the restructuring is a very easy word to say, but restructuring would often mean painful transitions, right? Change of managements, banks have to take haircut. Many investors who would have been invested in the companies have to exit at, making losses. And there could be also regulatory concessions which are not enough to turn around the business. At the end of the day, a restructuring is only as good as the effect it has post the restructuring, right? If post the restructuring, the earnings do not improve or the company's health is not restored or it is not sustainable, I think the restructuring is only on paper. So therefore, on the one hand, it's a great thing that the banks are and the regulator lent its hand proactively saying that, okay, I am ready to support. But I think ultimately it's a business, right? It's a business decision to what is the best restructuring that it can do.
Right.
And I think that we are yet to see a mature view of IBC as a way to do that. That's still yet not there. There are many issues there. So I guess it's a slow transition. It's not going to be that rapid. It's not that the tap will be opened and suddenly all companies will go for restructuring.
That was a meaningful addition, Mr. Subramaniam. Sharik, I will come to you and try to understand more about your perspective on the restructuring. How do you view as an investor specifically? I understand you invest in stressed assets and distressed assets. So how do you look at restructuring right now, specifically when you look at the assets of the Indian companies?
Sure, Amol. I'll just clarify. We don't just invest into distressed assets. We're across the board, and we represent various international investors into India. We do some domestic transactions as advisors as well. So, I think that you're asking me what the problem is, and then we'll come to the solution later, right? I see the problem as being kind of twofold on a practical basis, because we have to do this every day for a living, right? We handle these particular types of situations. The practical situation is that very often consortium of lenders are not coordinated well, especially the PSU banks with private banks or PSU banks amongst each others, because we live in India and that's part of the way, the inefficiencies that are there in the system. I'll give you an example. We recently did a trade where where one of the PSU banks was the lead lender and everybody else had agreed to a certain haircut. The one person was sort of holding out and not for any good reason. So I had to personally go and meet the bank chairman and said, listen, everybody, there's price discovery, everybody's figured this out. Can you please do something? And he said, yeah, sure, that makes sense. Let's do it. And it was done the next day. So it's not like, it can't be done. It can be done. It's just that this is a new paradigm for India, right? Like we are moving and like Mr. Subramaniam said, this is a point of inflection and transition. We're going from an old-fashioned system in India and other countries of relationship lending. You're my friend, so I'm going to lend you lots of money, right? To it being based on empirical standards, right? And that cleaning house has to happen. It is going to be painful, but it needs to happen. There's no choice about that,
No, just to add to what you said, Sharik, I think the other point is in restructuring, there are stakeholders who have to be aligned on the end purpose. What I'm finding in many restructuring is the stakeholders are at different points. So for example, we did a very, what I would call is one of the most successful bank auction purchases and or acquisition of a company, which was a distressed power company. And I found that it's very funny that after the auction process, you suddenly find the counterparties to a contract standing up and saying, oh, thank you very much. You did a deal with the banks, but how about us? But frankly, you did the deal with the banks based on a contract which was enforceable. They said, but who told you that it is enforceable? We might like to have a say in your transition. Now, this kind of misalignment of stakeholders is a challenge, but I think that the maturity will come only when successful changes happen. I think everybody will realize the importance of value creation when in a restructuring, only when restructuring few examples go through well. For example, the company I'm talking about, we have now turned around dramatically within 6 months. And suddenly the main stakeholder, which is the government of UP, is so happy saying that, look, I was getting power. I was just not getting power, first of all. Now I'm getting it and it is very, very cheap. So next time around, if some restructuring proposal comes, I suppose they will learn to not to meddle with it and not to stop it. That is the way I look at it. So it's a stakeholder alignment is very critical.
Okay. So, I completely buy your point. And just again, to your point, I think that this is a systemic issue that, we face in India. And especially, since we represent a lot of international investors that are used to doing things in a straightforward manner. When somebody says a contract says ABC, that contract says ABC. It's not like after the contract is signed, you can just renege and say, you know what, I don't feel like it now, Right. We also deal with situations, for example, where there's, binding term sheets on both sides, everything is done. Everybody said, okay, it's done at 9,000 crores, and suddenly the promoters said, nahi, mujhe nahi chahiye, 9,100. So I think that, moving trying to hit a moving target is very difficult in anything, and in restructuring as well. So if you're trying to hit a moving target, eventually the target has to stop moving, which it will, I think, at some point.
Thanks, Sharik, for that addition. And Mr. Subramanian, your point was also a very important one. Ms. Goyal, I will come to you, and I would like you to explain us bankers' perspective on the restructuring. How do you look at it? What is that you want from the restructuring of the accounts?
So Amol, from the banker's perspective, when I really look into the restructuring is, first let's go back why the resolution via the restructuring. That means we are very much aware of the fact that, yes, we are going through the uncertainty and we need to provide a helping hand to the borrowers. If there is a proper alignment with the borrower, and that's what we've just now, what Sharik and Ramesh has been talking about, if there is a complete realignment and both bankers as well as the borrowers are in a position to move forward in the right direction, not from the short-term perspective, but more from the medium and the long-term perspective. It's a good solution to come out of the uncertainties. That's something, but you are giving a relief for some period, but make sure that you are being monitoring it continuously and also providing the solution or the help what is required during this uncertain period, and then get going and then moving this restructured book into the normal book as early as possible.
So, Mr. Subramaniam, I would like to have your corporate perspective or a borrower's perspective, considering the current situation, where still there is unpredictability, still there is an uncertainty. We don't know how the situation will pan out. We have big hopes from the budget also, which is just going to be there in next 2-3 days. What is that the borrowers are looking right now?
I think the pandemic has not, frankly, changed the basics, right? The basics remain the same. Borrowers need to be convinced by the people who have to act, which in the case is banks. In some cases, it is the promoter themselves or other set of investors or counterparties to major contracts to which the asset is dependent on. Of course, I come from power sector. There's a huge dependence on long-term contracts. In many other cases, or in case of infrastructure, concessions is a very common phenomenon. But in other cases, restructuring, it's a need of the hour for the investor and the banker. I think as a borrower, what you are really looking for is a win-win situation where you are getting rid of a debt which you would be absolutely not able to service, and there's a set of investors who find value, and in between there is a balancing act by the bankers so that they don't burn too much and they're not accused of selling too cheap, and at the same time they post that at least their whatever debt is left after the haircut is at least assured to be serviced. One of the things that I find today missing is not from a borrower side. I think also the banks have to have the real expertise typical to a private equity kind of deal makers. Today our banks are not equipped for fully for complex structuring, and they get hazarded if you do structuring of more than a simple structuring. I think that there's a need for equipping the banks with additional capability to execute deals and make it work faster. And I think that and second, the restructuring is also a painful decision making, and you have to take discretionary decisions. You have to take some calls. Now, a purchaser and a private guy would take it easily, but for PSU banks, you should not be. I mean, you can't blame them. Their system will be questioning them after 10 years. That why did you allow this haircut, or how did you allow this transition to happen? So they have to be very careful about the decision. But I must say that they're trying their best, but it's not easy. So bottom line, for borrowers, it is more a win-win situation where they exit with grace and some amount of, let's say, the saving. Whereas the key thing is the bank should be convinced that it's a win-win deal for them apart from the buyers and the sellers.
I think valid points. Sharik, before I come into you, I remember an important quote from a chairman of a large bank in the country. He says, "I can take some haircut, but please note, I don't want to go bald." Ultimately, so this is the situation when it comes to
well, it depends on whether you would want to go bald or whether your head is going to be cut off, right? I mean, so I think that I'd rather get a really short haircut, right? That being said, this is a one-time phenomenon. I believe that this is a time when India is going to go through its transition. It's going to go through a bit of pain, and I think that between Yes Bank fiasco, INFS, NPA issues right now, we're kind of learning our lesson, right? The flip side to that is that I think that some of the processes are being put in place right now, and these are teething issues that in the next 2, 3, 4, 5 years will become much more easy and more aligned to how international investors think and make the systems more transparent and efficient. And to Mr. Subramaniam's previous point, I just want to add from the borrower's perspective, to prevent this from happening in the first place, right? I think that the CFOs need to be the disciplinarians in the organization. See, entrepreneurs, I'm an entrepreneur, right? We have a bunch of businesses, investment banking is one of them, right? And entrepreneurs by their nature are very rosy thinkers, right? Otherwise they don't become entrepreneurs, and they will always think that they can service any debt they want. It's the CFO's job to say, yes, I know you're the boss, but let me tell you, you should not be borrowing this money. You should either be divesting a little bit of your equity right now, which Indian promoters hate doing because they believe it'll be worth 100 times in 10 years, right? And not borrow, or you should borrow judiciously with our current cash flows and maybe a little bit more of the projected cash flow, so that we know we can service the debt and we don't find ourselves in the situation that some of these people are, or find ourselves again in this situation post restructuring.
Yeah, Sharik, you're assuming probably that the entrepreneurs listen to the CFOs.
Yeah, that, of course, I don't listen to my employees either very often, but sometimes they say, hey, maybe you shouldn't be doing this, and it's their job to bring that up, and it's my job to decide whether to listen or not. But of course, even I think I'm going to be a billionaire in the next 12 months, but let's see.
Oh, great. Wish you all the best. And
yeah, Upma's I'm going to borrow some money from her, and then we'll take it from there.
Absolutely.
Sure.
What I really like about Sharik is that, it's a prudence call. If you being very rosy and continue to have the over leveraging, definitely that hits one way or the other.
Okay.
And just one from the investor perspective, since we touched upon onto the returns part. So whenever we invest, we always go for the risk-adjusted returns. So that factor is already being factored in, and if we are being entering into the sector without considering the risk-adjusted returns, that's something also need to be. I mean, that's we as a CFOs keep advocating. Please look into the risk-adjusted returns and not just the returns which is being talked about in the markets.
So, on that part, in fact, Ms. Goyal spoke about over leveraging, and I wanted to, in fact, ask about that. So currently IBC is under suspension, and, we see a deluge of cases once the NCLT starts, its session. So what is the call that the bankers are taking right now? I do understand initially they were not lending, they were risk averse, then they started lending. But what is the call that the bankers are taking, considering the huge restructuring, considering the many defaults, potential defaults, and deluge of cases in the IBC?
So as far as the again the credit offtake call, what bankers are being looking at is understand your customer. Make sure that you are building it up the good portfolio quality book. So if you understand and you still have the very good portfolios and very good borrowers who's been looking out for the money. So please do not stop lending. Always come forward and protect your book depending on the risk appetite you and your organization is having. So I am seeing that yes, there has been a credit offtake, but very selectively onto the good customers.
Okay, Mr. Subramaniam, do you want to add, and let me pick that question? How do you see the restructuring? Do you see deluge of cases because you being a corporate and power and still, and sector is always in the headline, specifically when it comes to the NPAs and defaults. So how do you see restructuring cases specifically in 2021 now?
No, I think it will pick up for a couple of reasons. One is that there is a lot more, I would say, examples of what is to be done and what is not to be done. Banks have learned. Okay, even though there are failed cases, every failed case of restructuring also gives a lot of learning. Okay, so the banks are learning, the lawyers involved are learning, the investment bankers are learning, the sellers are learning, the promoters are learning. The promoters are sitting and I've gone through several of the assets in the market. I mean, sometimes our promoters are sitting on a very high ground. They have no idea that, the longer they stay, the worse it could become. And sometimes it's bizarre, their appetite for risk. So what happens is, I think going forward in 2021, I think that with capital flows looking good, and the pandemic hasn't turned out to be as bad as we thought, I think there will be a lot of emphasis going forward on improvement on each of these areas. And I think government is keen to also reform wherever required, chip in with whatever changes are required to make things happen. So is the regulators. So I think I feel there's an environment there to really go for consolidation in almost all sectors. I don't see this stopping, and I think it's a good time to do all this.
Interesting point, Mr. Subramaniam. And as we see, consolidation, in all the sectors, Sharik, how do you see the demand specifically for this particular, the restructuring in the assets going ahead, or specifically in 2021?
So I think that, the first question that you asked was on the IBC process and whether there'll be a deluge, right?
Yes.
So I think that, yes, first of all, there will be a deluge.
Mhm.
And I think that it's going to happen in the following order of prioritization.
Right.
First, people that will get restructured are good promoters that had bad luck, right? Bad luck can mean a COVID affected company, for example, that has severe cash flow crunch, hospitality, some hospital chains where the government, forced them to have caps on the amount that they could charge customers, etc. Totally exogenous circumstances. Sometimes government inefficiencies and risk as well. We have a bunch of road developers, for example, which were supposed to get certain land and it didn't happen at the last minute. There's a port that we're doing right now, for example, situation happened where at the last minute the government had some issues.
Right.
This is the India regulatory risk, right, that we kind of face. So good promoters, bad luck is the first thing. The second, I think, would be good businesses but bad luck and change of promoter face, right, is going to be the second stage. And I feel like the third will be bad promoter and bad project, and then you'll have someone coming on and saying that, listen, this is a bad promoter, it's a bad project, but you know what? We have high risk appetite, and we're going to buy this for 20 cents on the dollar. And the bank will say, okay, let me think about this. It's a terrible promoter, it's a terrible project. We're not executors. These guys are executors. They know how to build a building or a port or a road. Let's let them get this off our hands. So I think it'll happen in that sequence, and there will be a deluge.
Okay. So, Ms. Goel, the bankers are also know the fact that there will be a deluge of the cases. Is there anything that, is there any specific strategy that the bankers are working on so that, perhaps they will not go to NCLT? I mean, not specifically about the settlement of cases, but when we say now, there will be a lot of cases coming up. There will be a lot of issues with the borrowers. There will be genuine and there will be willful defaulters as well. Is there any strategy that the bankers are crafting right now to deal with these cases?
So first thing is, if they come forward for the settlement, one should go forward for the settlement. I mean, there is a value for money. The more you drag it and keep it and show just as a notional income, will that work for us, or it is something what the money you have it in hand will work for you? So I personally go with the second approach, whereby you have the money, you understand the situation, and what Sharik has been talking about, you understand the project is bad, your promoters, I mean, where you have invested, it's not being doing well. It is better to take the action there and then rather than postponing the problem. So it's more of, it's going to be a mixed strategy, whereby on a case to case basis, if you feel that we are in a position to, I mean, if the capital is getting protected and you're getting a reasonable returns, so please go for it rather than making it showing the notional returns which remain on the paper. And when it comes to the realization, the hit is much more than what is being envisaged. So it's going to be a situation based approach. That's what I feel.
Just to add to what Upma said,
Sure.
I think one thing which needs, it's a learning, right? That people who are holding assets, whether it's investors or banks, is the same, right? You're holding assets. You got your debt converted to equity also. In some cases, you are actually as good as an investor. The whole trick is, how much do you want to stick on for that last dollar, right? And for that last percentage point return on the equity. Sometimes it is very important to take a call on releasing bandwidth. The amount of effort managing a sick assets, I can tell you, I mean, I really hats off to, banks like State Bank, the kind of effort they have to do to manage every day. They are literally running a CEO's office from their banks. Because every day that company has to survive. Every day there will be a demand on that company. Every day there will be a problem with the company. Sometimes I feel that it's just not worth that bandwidth. So sometimes that risk adjusted return, I would say, is also bandwidth adjusted return could be very different.
I completely agree. Absolutely.
So what is the impact that on the companies or the borrowers that we can see, Mr. Subramaniam, because we know that there will be a lot of NPAs, there will be a lot of cases of the restructuring. Bankers will go slow. And when the cases goes to NCLT, I'm sure it will take some time. Though it has a deadline of 160 and 180 days, it will take some time. So, what is that the borrowers can do? Will they wait and just watch, or find some different ways?
Well, I don't think there's too many choices. No? When a case like that happens, what will the borrower do? He's He's just wanting to get out of it as soon as possible. He's waiting for the parachute.
Right.
So I think the action is more on the other owners, co-owners and the bankers to take that action quickly and move on, right? Borrowers have got no role to play. They are done whatever mistake, and some of them have also made money out of that asset already. So therefore, they have no stakes in that, really speaking.
I'd like to add to that, Amol, if you don't mind. Both Ms. Goyal's point and Mr. Subramanian's point. I totally agree that the opportunity cost for time is high, right? And the bandwidth of every, anything is human beings. They're people. There's a certain amount of bandwidth time, and not everybody is an expert in everything. So I think that it is important, while we go through this process, for either the the lenders to transfer the loans to either entities that know how to handle those specific industries well, and know how to take them over and run them and do their job of banking, right? Which is more important, as Mr. Subramanian very, very, very well pointed out, And, to Ms. Goyal's point about, the fact that, I think that banks, do need to help and do need to get clean and clean up their books and to make that move forward. There are international funds that are there now, right? Who, like, for example, we're mandated to deploy $5 billion by one of our investors in the next 2 years into this specific thing. So Ms. Goyal, if you have anything that you need, let me know. I have a $1 billion check ready for you anytime you want. So we'll talk about that offline. I'll clean up your books for you. I think that this is something that is going to happen, and it is the smart money that comes into India, along with the partners that know how to navigate the waters. That is very important. Otherwise, international partners do not know how to walk the corridors of a PSU bank, and then another PSU bank, and then another PSU bank, and get one signature, and then take that same piece of paper and get another signature, and then somebody physically has to actually do it themselves. Because if it's left to the banks, it never happens.
Could you also, Sharik, add more on the why the international funds are taking huge interest? I mean, I have seen a lot of vulture funds taking interest in the Indian assets, stress assets, or any company which goes to IPC. Could you just elaborate more on that? What could be the reasons, and what kind of investments and what kind of returns are they, expecting out of this?
Okay, so let me answer those separately, and if you could remind me about the points, just in case I forget, the three questions that you asked, right? First of all, I'm going to come back about the vulture fun point at the end as well. Look, everybody likes a discount, right? If you buy a shirt 80% off, would you take it? That you like usually?
Yes.
Yeah, so would everybody else, except when those guys get a discount, they make a bunch of money personally, right? So, you have a situation where in the Western world, right, you have US endowments, charities, pension funds that have, the concept of a minimum amount of return that they require, the required return. For example, let's take an example of Harvard University, right? Or I'm going to Harvard. The endowment is $40 billion, right? 40. Columbia University is about 20 billion approximately, right? Now, it costs a lot of money to run Harvard University, right? And all its programs all over the world. So typically, they need a 7.5, let's call it 8% return, to kind of break even. 5% needs to be dispersed for expenses towards the university itself. 2 would be kind of inflation, and 1 would be the administrative cost of handling the money itself, right? So 8% is really what they need. In the US, where they're going to get that? Money's at zero. The stock market's at an all-time high. There's no guarantee of any return there, right? How are they going to get their 8%? Now, people talk about, they have to reach for yield. Where are they going to do it? India cannot be ignored, right? And therefore, they need to have high margins of safety and so high risk return in certain things to adjust so that they can get to 8%, average, right? After some treasury bonds, et cetera, et cetera, et cetera. If you look at, this, it used to be, stressed assets used to be an alternative investment, right? And used to be on the fringes of the investment world, right? That has completely changed since global financial crisis, because of GFC, interest rates were brought down practically to zero, right? And then, all these entities needed to figure out how to make money.
Right.
If you look at CPBIP, for example, everybody says, how can we compete with CPBIP? The cost of capital is so low, right? Why is it so low? Because of Indians. Let me tell you that. Canada has a GDP of 1.5 something trillion, approximately the same as the state of New York. Okay, they have high taxes and a lot of money goes towards pensions, right? Okay. So you're guaranteed money for life. You're never going to be poor if you've worked especially in the government service in Toronto. More people immigrate there, and therefore eventually they know that there's going to be a requirement of somebody getting $5,000 a month in 30 years or 40 years. That's going to happen, right? So if they do not reach for yield, right, they are eventually somebody's check is going to bounce when the postal worker goes to, in 50 years to cash his pension check. There's not going to be any money.
Right.
So there's no choice, right? They're handcuffed volunteers, as Howard Marks calls them. They have to do it because they have to have reach to yield, because they have to make sure that they don't diminish over time. Otherwise, Harvard University will disappear and there will be no more teachers in Canada.
Very interesting and a good explanation, Sharik. Subramaniam sir, when we talk about restructuring, do you believe now, it's such an interesting topic and such a complicated issue right now for most of the borrowers and the corporate India, that the next few quarters or perhaps the entire financial year will go in settling the accounts, in settling and going for absolutely restructuring, and they will absolutely go what you can say, they will not even think about the capacity investments or the capex plans or the future plans, which will also hamper the economy. So overall, do you believe that because of corporate India will focus more on the restructuring, the investments in the future will be very less going ahead?
I don't think so. Look. In the entire economy, there will be a certain portion which will have to be restructured because of many factors. One is proactive consolidation, which is basically vision being built in some sectors and by some promoter groups or investors. One is distress, which is, they are stressed out. So they have to be changing hands. And the third kind of restructuring could be just bringing in efficiencies and improving the business itself, right? So I think the business, the third category, which is the improvement, which is value accretion by simplification, bandwidth conservation. For example, Tata Power, last 9 months, we've done enormous restructuring. We've sold our non-core assets. We are bringing in partners for where we want money. We're getting out of businesses to save our bandwidth. We are just raising money where we need to. So all this is, I would say, positive restructuring within the existing business as usual. Then there's a whole stress situation that will always be there. And I think that the main issue for that are there investors who are willing to take these risky assets and put their money in, which is what Sharik and probably his teams are doing. So therefore, that is a great opportunity available today in the market. And I think that will be a big process will be on, because the only thing that can stop this kind of asset restructuring is availability of investors and risk takers. Then the consolidation piece is the other big piece which is happening, which is purely due to demand. If there is good demand for a certain product or service, then there would be, take the Reliance example. It's purely demand driven by what they see as future, right? What they see as future and what new products and services are coming. So much is happening in the e-commerce space. So that is all demand driven. So I think these three categories of restructuring will keep going through. I think that the only I don't see a great sudden shift in the next year. Okay. What I can surely see is people who are holding back in 2020 because of pandemic and the worry that, where this all will going to end up, etc. I think they are much more, relaxed now to take the decisions which they were wanting to take in 2020 and they didn't take. I think that backlog, I will see hit the market.
Sharik, you wanted to quickly add?
Yeah, Amol, to Mr. Subramanian's point, I think that, yes, I think that there's definitely, we know this for a fact, right? That there is extra capital available 2021, 22, that would have been deployed 2020 had pandemic not happened. And now that the pandemic has happened, there are even more great opportunities in India for international investors that are nimble, that can make their own risk decisions, right? And actually, to bring up a point that Mr. Subramanian had brought up in the prior question, also the rationality of the promoter is important, and being realistic about the present, the situation that they're in, and where they're going to go. Case in point is one transaction that we're doing. We have a term sheet in the power sector. In fact, we have perfect term sheet for the promoter. Everything is perfect. 50 basis point problem somewhere, right? And erstwhile billionaires, right? Because they were, and now they're not, but they haven't come to terms with that. Reality will set in from both sides, I think, where borrowers will realize that eventually they have to compromise, and promoters will realize that if they don't, they will eventually lose their assets completely.
Okay. Yeah, Ms. Goyal, you also wanted to add something?
I just wanted to, I'm completely agree. And both the things, like as we are talking about the restructuring, but investments, these are two things which will go side by side. So we have money available. The promoters or the investor, they have understood, yes, the thing has started slowly opening it up. The money is available that get invested. There will be an investment as well as there will be a process which is being followed for the restructuring. So it's going to have a both situation going side by side.
Stay with me, Ms. Goyal. I will have one more question for you, specifically on the regulator's perspective. How the regulator is reviewing the whole restructuring, the game? What is the big fear that the regulator has?
So from the regulator perspective, this is a very good window which is available to the bankers as well as to the borrowers.
Okay.
But what I feel what the regulators are being looking at is, please go for the restructuring when there is a surety or you are aware of it that the money will be returned. Let's not give your money and then go for the restructuring. Go for a very genuine cases where the customers are asking for the restructuring. Help them get going. Make sure that your P&L is protected. You do provide for whenever you see for the slippages, and keep monitoring your accounts. So what regulators are being looking at, go in a big way as far as the restructuring is concerned, but make sure that you are doing the restructuring to the right set of borrowers.
Okay, I will take one more question on restructuring with all of you, considering our theme is breaking the chakra. But before that, the budget is scheduled just after 2 to 3 days, and I will not let you go without taking your wish list or the expectations. So I will start with you, Mr. Subramanian. What do you expect from Mrs. Thapman, the finance minister? She's going to present the budget very, very soon.
I'm sticking to my turf, which is the power sector. I think there's a lot of reforms that the government wants to do and wanted to do. I think it's high time we put that into action. It has to be bold. It has to be, I would say, ambitious, because otherwise we will not go anywhere. They have already announced some things. I'm looking forward to some major announcements in the budget to get the power sector on track financially. It has got the potential. It just needs that bit of a push.
In terms of the regulator, we're too close to the budget for me to give any comments right now. I think that, it would be much more prudent to wait until after the budget comes out to make any comments about regulations. Really, I mean, that is one part of it. Really, it's up to people like the bankers, like Ms. Goyal and I, to figure out how to get some of these things practically done, where if we have capital and they have a problem, the problems can be solved, and nobody pays you for solving a non-problem. So you identify the problem, and then once you've identified the problem, you can then go and rectify it if there's available intelligent capital and rational parties and counterparties on each side. So I purposely did not answer your question about the regulator because I feel like it's not appropriate for me to do so right now.
Okay, Ms. Goyal, anything on budget expectation part?
Amul, what I'm looking at is more tax ops for the micro enterprises, and we deal with microfinance customers, and that's very unorganized sector. That also government should come out in the take some relief to the corporations or to the banks who's helping that sector by way of a tax ops.
Interesting that part, and I will just take one more question specifically on our event theme, and we'll try to connect with restructuring. So our event theme of this leadership summit is breaking the chakra view and trying to understand how CFOs are breaking the chakra view. So considering these things, we partly, I think we discussed restructuring part all in detail, but I will just quickly ask all of you, and I will start with you, Mr. Subramaniam. So what are the approaches that the companies, the borrowers should look at when it comes to restructuring? Maybe you could just highlight one or two specific points, or maybe two, 3 points that comes to your mind.
You see, restructuring has to be seen along with strategy, right?
Okay.
Restructuring is not an isolated event. It is part of how you want to run your business, and what is the vision you have, and what is the end game. So I would say that the approach clearly is that first you have to define what you want to do, and where you are today, and therefore what are the, either you get rid of things or you get things, right? So both will lead to restructuring somewhere, right? So therefore, restructuring is more of value creation exercise and simplification exercise. Many a times it also gives you very, very good attendant benefits, like you are able to then focus better.
Right.
You are able to also investors. Investors want clarity in businesses. So if there is a company which is doing 10 different things, they don't like it because they don't know which one is doing what and how they are, which is a focus area, which is not a focus area. So many of the restructuring is also directed at how investors would like you to focus on, probably on your core, and get rid of your non-core. And therefore they would also like to see capital allocation. So restructuring is an opportunity to demonstrate what is your capital allocation philosophy. So it gives you opportunity to put your capital, put your money where your mouth is, and get out of things which you don't know, or things which are not doing well. So I think that really is the fundamental thing about restructuring, and restructuring can be done in that sense anytime. There is no season for it, or there is no timing for it.
Yes, Ms. Goel, how should CFOs break the chakra view? What are the approaches they should take specifically as a borrower to deal with the restructuring? Key highlights from you.
So as a CFO, I must say we need to be very agile, understand the ground situation, and act fast. So the more we act fast, the more results we'll see it on ground. So let's not hold back to what's happening, understand the situation and take the decision. Be more close to the ground rather than sitting at the corporate offices.
Okay. Sharik, what is the approach that the borrower should take to
They
break
should
the
come to
chakra
me.
view of restructuring?
I'll figure it out. I'll tell you what, these are chicken and egg situations very often, right? And chicken and egg situations require something called priming the pump. You need to put something in to make sure that the chicken and egg situation gets resolved, right? And that requires a certain type of capital that can come in and say that, okay, this makes sense. If this guy was given 100 more, but he can't be given 100 more because of some regulatory aspect or because of considerations within the domestic industry, we can go and put in that $100 instead. We know that he'll get 1,000 out later, but he can't get his 1,000 because his 100 he can't get right now.
Right.
So, that's the chicken and egg situation that we break for a living.
Thanks, Sharik, and thank you each one of you for sharing remarkable perspective on the restructuring part. But before I let you go, let me ask you a soft and a very important question. We all worked under the lockdown. I know, Ms. Goel was working as essential services from office, but most of us also worked from home. So, what is that you missed the most during the lockdown, Ms. Goel?
Lockdown, it's a lot of learning phase for us being part of the essential services. We've been coming to the offices, so it's not experienced much of working from home, but I will not say I missed out anything. It's a good spending. In fact, it's the other way around. I'm able to spend more time with my family. So that's from the positive note, it's more connect with the family, what I've seen during lockdown.
Yeah. Mr. Subramaniam, what did you miss the most in the virtual world?
No, I think the physical touch is very important with people. And of course, we are also essential service providers. So we were in office. Most of the pandemic, I used to be in the office at least twice a week. So, but there's no substitute for meeting people and being connected. Also travel. Travel is, one realized that we were traveling and wasting money quite a bit. then we realized that, there's a lot more productivity can be done without traveling. But travel also gives you a change in meeting people and building relationships. I think that is also a very important thing that one missed. So, but I think we are, the good thing is now where to strike the balance.
And Sharik?
I would say both are, for me. I think that on the one hand, I think that it's personally been extremely positive. I started meditating 2 hours a day, so I wouldn't have had time to do that otherwise. Well, as Mr. Subramaniam said, we've realized that probably there's been a lot of wastage in terms of travel and time and all of that. We generated as an investment bank $3.5–4 billion worth of mandates, right, in the course of the last 12 months. And I did not leave my house because I'm diabetic. And so it did not affect my business at all. In fact, I've just cut down my travel budgets for everyone dramatically for the future as well. But yes, of course, given a choice, I would rather come and have a cup of coffee with you, Amol, which I will next week, than just only do this over Zoom.
Great, Sharik. I think those are remarkable perspectives from all of you. Thank you, Sharik. Thank you, Mr. Subramaniam, and thank you, Ms. Goel, for being part of ETCFO Leadership Summit. Thank you so much for joining us and sharing remarkable perspectives with us. Thank you so much.
Thank you.
Thank you. Thank you so much.
Thanks, everybody.
Thanks.
Thank
Thanks.
you.
Bye-bye.
Thank you.